Hi, Warriors. Patrick, Parmar, Rand, how's everyone doing today? Everyone ready to have a face experience?
A facelift?
A face, yeah, if you need one of those, what the hell? You know, right? Right now, the S&Ps are getting a facelift, challenging this resistance. So 3950 is still key on a close. May try and close above it, but I wanted to start with K-Man. WTI held 3 drives to a bottom. Don't be short, bears. It's time for you to go into your cave for hibernating for the winter.
Yeah, just it held, right? He was pretty close and in dangerous waters there. And
you know what? When I see things like this, I don't even get price sensitive. I say just buy them.
Mm-hmm.
Okay, so you know, I know where I'm wrong now, right? Maybe
Exactly.
give this line a little tolerance. You know, Blake talks about it all the time. If you look at trades that are good or bad from an area that usually happened the day before or so, your risk on the trade. And I think I looked at DSI, WTI is, I don't know, in the 30s. Okay, so and it wouldn't take much fundamentally for this to turn either. So just something that I like, and I'm interested in your view of what fill us in with what happened overseas. I know it's a bit of a repeat with what you do on the Flow show.
Yeah, no problem at all. Well, first of all, if you look at pure FX pairs,
yeah,
they're pretty rangy. I would say, even if you look after the Bank of Canada yesterday, dollar CAD in a big figures range, but it did hold pretty well the upside there around 136.90 figure, very decent resistance. And it retested it this morning when oil was under $73, and it really responded very well to the rebound in oil as well. So the Canada crosses are back with a little bit of a vengeance here. So and now we're on the short-term support around 135.90 figure on the dollar CAD. So yeah, through there we could see a little bit more. We're also seeing it on the Canada crosses.
Yeah.
Euro, Canada, Canada yen, and other people are looking at various other Canadian pairs. So yeah, it's very sensitive to oil moves again. Now that the Bank of Canada is out of the way.
Yeah, Blake shorted it before the BOC.
I think it was short Kiwi CAD, right?
Andy was short USDCAD. I remember before that. Good
yeah,
guess.
Both, and I took the dollar CAD off, and yeah. But good morning, guys. Anyway, yeah, I'm in both of those, or was anyway. I'll jump out.
Okay, jumping in and jumping out, and is Ryan around today?
No, he's taking a day off.
Okay,
he has other stuff to do.
All right, so you know, we saw Gregor's count in the yen, where he thinks there's more left, but right now it looks like ABC. You know, that we could get better levels. What level would look better to you? Say like 35.70, 35.20 down in here. Do you have an interest in long side scalp, or you won't know till you get there?
Yeah, that's a bit. I think we're again. I'm going to repeat myself, but we're in short-term ranges in there. The next big data points are about to hit the markets
next week.
And then next week central bank galore. So I think we're in a bit of a range there right now in the dollar yen.
Okay. Fair enough.
It's been volatile of late, so give and take, we're in a 2.5 big figure range in my opinion. 130, 138 top side, 135. Yeah, call it 135.5 on the bottom side. It could already hold around 136, in my opinion as well. So 50 points on the downside, perhaps. And I'm really only planning on short-term stabs right here and now.
Until January?
No, until I know more about the inflation and the central banks. I'm not planning on keeping many things for a long time, apart from trading around some longs in euro sterling, and I'm still in my long-term silver long, which I'm managing from time to time. Sell a bit.
Where you're wrong, under 22, because it looks like it could be a failing rally up here.
Yeah, but then the other day I was trying to buy low 22s and I didn't get it. So.
Oh, yeah. Well, you know what? Took me a long time to accept it, and because sometimes we do hit things on the dime, but that's more the exception than the rule, at least for me. So I have a philosophy: don't expect perfection at the crap table.
No, that's true. Very true.
So,
I don't play crap,
or you'll drive yourself crazy.
I don't play craps, but I have a lot of crappy positions from time to time.
Same thing, man. Anyway, so S&Ps again, failed from this. That's why it's a close. But this is pretty important. If we get through it, it's like a trap door.
Yeah.
So it held it on the 4-hour yesterday, and I put out a tweet. To me, when I look at Apple here, I call this a hope low, and so far the hope is working. Bounced off this, probably bounces here, but it's sure looking heavy to me and closes under 140. I think Apple's 8% of the market, so we get a close under this level. I think we could make new lows for the break here.
Yeah.
So that keeps me defensive in S&Ps for now till that happens.
Yeah, I think on the S&P it's really 39.41 right now, so 3,900, 4,100 right now, and if it breaks on either side, there's probably another 200 odd pips to make, right?
Yeah. And I notice
3,700 on the downside, and then perhaps on the top side a bit less, perhaps.
Okay. So we're getting some follow through on the metals now. The euro almost looks like it wants to make new highs. That 106 level.
Yeah,
they all do. The dollar still doesn't look that great.
No. The dollar doesn't look great. It does feel to me that rally dollar sellers still have the slight upper hand to the dip buyers. Yeah. Even though we're in a range, it looks like the rally sellers are more aggressive than the dip buyers.
Yeah, pretty weak bounce. So Greg is thinking, A, B, C, but I don't know. We could just wash towards a 102 handle.
Yeah, and there's also year-end now to take into account. What do the money managers, asset managers have to do? They could be waiting for this whole slew of central banks to really get going. I don't know. I mean, this Dixie, could be just rangy as well until next week.
Okay, so Stel, any comment on metals? They're acting
no okay. Comment, Your Honor.
No comment.
I'm kidding.
I had a friend who grew up kind of in the rough side of Chicago, and he was an Italian guy, and he said his father taught him to say this: "I don't know nothing about nothing."
You know that right? I don't know nothing is double negative, which means I know everything.
Anyway, they had that line rehearsed. So what do you think here, really? Do you think we're going to make a move towards the highs, or this is a failing rally? I'm almost tempted to try short in the metals. I think silver's up to about 80% on the DSI.
Yeah, good question. I actually just wrote a blog post. published it literally 3 minutes ago. I'm going to put the chat. I'm going to put the link on the chat here. Hold on.
By the way, it surprisingly is well written.
Oh wow! Thank you.
Surprising. It's really, it's really well written. You guys,
nobody expected that.
It's so nobody expects a Spanish Inquisition. No, seriously. It's about my views on the Fed next week and what I think is going to happen going into the early part of next year. And I have to agree with Dale, even though I am very bullish metals. I have been accumulating still a pretty small position in silver long, which has been doing well. I think the risk is now for a pullback in risk, for a spike in the dollar, for a spike in yields. How big, I don't know, but my big worry is this. We're pricing 50 for next week. I think that's done. At 25 or 75 would be out of the question. It would surprise markets. I don't think it's going to happen. So we're pricing 50. Fed Fund futures pricing another 50, and that's it. Then we price two to 3 months of flatness, and then we start cutting, and we have 50 cuts by January next year. That for me, when Powell delivers the 50 next week, if he's not dovish, and I do mean dovish, then we're only left with one more 50. So how is it going to be? They do 225s, they do one more 50, then they stop. I just feel that the market is first going to price a higher peak in rates, possibly for longer, and then early 2023, when inflation starts dropping fast, which I think it will, then we start reversing, and the dollar drops and yields drop, and maybe yields don't drop that much, but risk assets probably start running. In the short term, I agree with you 100%. That's why I'm very skeptical, and not skeptical, I'm hesitant to add more to my position, because I think there probably is a leg lower coming first.
Okay, well, if it happens, just arithmetically and coincidentally, there's a trend line that both come in at the same spot around 20 and a half.
Okay.
If we get back under 20. If it breaks that, you're talking $17 again, which no one thinks can happen.
Yeah, I think that's very unlikely, but obviously anything can happen.
Yeah.
But I this is what I think is going to happen. That's my plan. I'm waiting for a bullish yield / bullish dollar move. Theoretically, metals are going to pull back, although they have been performing well recently. We have to say that they were underperforming for months and months.
Years.
We always said, they were underperforming, and now suddenly they're starting to outperform. So we have to also take that into consideration, and that's why I've already started accumulating a little bit. I didn't wait for the absolute confirmation, breakout above those highs in that what is it, 20? Where were those highs?
22.
Hold on.
22 and a half.
Yeah, something like that. Yeah. 20. No, the previous highs, the 23 and a half. We break above 23 and a half, it's game over, I think. But
okay.
I think we have one leg lower coming first. My humble opinion, as always.
Okay, it's a good opinion. Let's see, euro pound. You think we're basing here, came in?
We're in the middle of the range, aren't we? 83 to 90.
Yeah, in the big one, we're in the middle of the range. In the shorter run, I like to pick them up under 86 and sell. But it's really a short term.
It's a range trade.
Short term range trade from the long side.
Okay. All right. And copper. It's threatening. So the China reopen, is that why copper's going? And perhaps that's a reason for crude finally starting to pop here and commodities coming back. They say it's not going to be a straight line. It's going to be a choppy reopening. It's not just going to be like you turn on a light switch. It's probably going to be more like intermittent things happen, the reopening, but I think maybe crude is part of this reopening trade, but copper has been acting pretty good. And, it's hard to say that we're going to have a recession if we're also going to have a bull market in Dr. Copper, right? So just something to pay attention to. It tried once. Here's the big picture. Here, this was a breakdown at 4. It got up close to it and backed off. Looks like it wants to challenge it again. So I interviewed Adam yesterday, and he was talking about well over $5, actually a double in copper.
Can I jump in here really quick?
Yeah. You're
talking about copper, and actually Mike just put in a night. She was asking about her portfolio. It was like a doctor friend, and I was just discussing with her things, and I was just talking about, like, I was giving her the situation, like, because she was okay. Sorry, it's early in the morning for us, Dale. So, it's okay. Here, I'm going to take over the charts when I do this.
Okay. Go ahead.
I was discussing with her about the idea that the markets are going to be either, they're going to be 5% higher or lower based on what happens next week. I'm like, it just, because she's like, where's the market going? And, should I be a buyer here? And I'm like, well, if you hadn't been buying already this year, like earlier this year, buying it now doesn't make a whole lot of sense to me. However, I'm like, we are going to be trading here. We're going to be trading up here by year end, right? Or we're going to be trading down here by year end. And that's strictly, it really depends on what happens on next Wednesday. I mean, that's just the bottom line, right?
Some very smart people, Blake, want to short it up there at 4,200.
Me too. And I said that's our best case scenario. But I forewarned her. I'm like, look, the best thing that can happen to us is that the Fed chairman is a little bit more dovish. We do end up seeing a market rally. We do see the market, asset managers chasing into year end. And he just, it's kind of like the FOMC minutes, or excuse me, it was like Powell's speech just, what was it, a week ago, where he was hawkish, but he wasn't quite hawkish enough, right? So, the Fed chairman could be, we could walk away and say, well, he still seems pretty dead set on fighting inflation, but maybe just not enough to where everybody goes, you know what, screw it. I need to get long risk. I need to start chasing the market. I need to chase it into year end because I need to, have a decent return going into year end. And if you get that combined with what's happening in copper, you were just pointing out copper. Somebody had earlier mentioned China reopening. All of this would feed into a rally going into year end. And I hope that happens. Now, what I hope happens and what, happens could be two totally different things. But what I hope happens is that we get a rally above the 200-day moving average. We get some move that allows us to get to maybe the 50% retracement, maybe the 618 retracements, maybe somewhere up between, 4150 and 4300, somewhere up here that allows us to get freshly short risk going into, the first quarter of next year. That's what I hope happens. And I think we should all be looking at that as being a great opportunity in the event that the Fed chair does maybe not sound quite as hawkish as expected, and combine that with the China reopening. Let's get a rally. Let's let this market recover a little bit, because I look at it as being like a cliff diver. If I'm a cliff diver and I'm going to do a swan dive off of a cliff, I'm not going to walk up a couple of, I'm not going to climb, a story or two higher and just jump off. I could do the same thing in a public swimming pool. I'm going to go climb up a big cliff, and I want to get a big, I want to get fully stretched out in my swan dive up here. Right. So let's hope we get a rally into year end, because I'm going to short the living crap out of it, second, third week into January. That's what I'm hoping to do, guys.
I'm going to tell David Hunter on you.
Don't tell David Hunter. He might beat me up. So I don't know.
He'll dominate your whole tweet stream.
Steve, do you guys have do you have any arguments or any thoughts on what I'm hoping happens? Now, again, Steve, what I'm hoping happens is completely different than reality sometimes. So,
Steve Volke is here.
He is. He chimed in earlier.
Oh God, so good to hear your voice.
Where
How are
is
you,
he?
buddy?
Nice to hear your voice, Dale.
Oh, there he is. All right.
All right.
Steve, shoot holes in my ideas.
Yeah, I didn't listen to your ideas because I was
Damn
sending
it.
an email.
Steve. Damn it, Steve.
So sorry.
Anyway, Blake is hoping for a year-end rally to 4,200 in S&Ps
Yeah,
as
that's
one
what
of the
I'm
best
hoping.
shorting opportunities of the year.
I agree that if we get there, it's going to be a great shorting opportunity. No, I totally agree with that. Now, I'm not convinced we're going to see that happening, though, on the other hand. But if
Too
it does
convenient.
happen, yes, it's going to be a very, very good opportunity to short.
Yeah. All right. Well, maybe K-Man has something to say.
I
K-Man, what do
agree.
you have to say?
I agree, man. It's December. I agree.
Let's get a rally.
Do you know?
Right?
Do you know what the problem is?
What's that?
I
Everyone
agree
does.
with that too. Everybody agrees. That's what the problem is.
That's a problem, right?
Yeah,
Everyone
I
wants
know.
to sell it there.
So we either don't get there, or we
Or it
get
won't
there
work.
and then we go flying towards 5,000.
Well, you know, that is the scary thing is I do hope that and that is scary. I think everybody's hoping for some big rally to sell into, and you're right, Stelios. I mean, we could like I said, maybe and I'll go back to Mike's comments earlier about having a you know, hawkish Fed chair. Look, I don't disagree with that at all. I thought he was pretty hawkish in his speech last week too, but wasn't hawkish enough apparently. So, you know, let's imagine he just, you know, is really hawkish. I mean, we could end up just, you know, selling off to and closing the year down at 3,800. And I think that is a true risk in the market. But I hope that doesn't happen. I really don't. I'd really like to see us higher than lower versus the other way around. But there are, I mean, you know, a lot of nice developments that are leading us to believe that the preferred move in the market is going to be higher. I mean, you got things like, you know, the US dollar CNH that's breaking down. You got bond yields that are actually, you know, moving lower, and I don't know if that's really going to be. I don't know if bonds are moving higher because, you know, it's pricing in a little bit more dovish Fed, or if it's more like risk aversion or not. Not too sure about that. But then you got the dollar that also is relatively weak too. You know, maybe that's pricing in a dovish Fed too. So I don't know. And then you got, you know, as Dale, you pointed out, rightly so, copper looks great, man. We break above this 200-day moving average, and you know, we're off to the races here. So and then we have like the Aussie that looks really supportive too.
Yeah.
I mean, if we get above this 38% retracement, which comes in right here, if you guys can see it. Whoops. Right. Let me just grab it. Dang it. There we go. All right. Right here, that 38% retracement, we get a good foothold above that in the 200-day moving average, and you know, the Aussie's going to scream. Oh, I don't know. I think I think the market's trying to lean into a rally, but don't be surprised if that gets thrown in our face and we see, you know, like I said, 3,800 again in the S&P. And I'm not gonna dismiss reality here. I think we're gonna really be facing a pretty big recession next year, and that's going to be like the next question. And I think everybody in here that's listening in right now is in agreement. We are going to be facing a pretty good recession this next year. How sharp is it going to be? And how and is it going to be like one of those, you know, oh, you know, we didn't really even notice that we're in a recession, or is it going to be a sharp one? And my gut instinct says it's going to be a fairly sharp one. If you guys don't know this, my wife has a retail business. She sells local goods, has relationships with people around in my area, and she's like the anti-Amazon of where we live. You know, she She makes relationships with a bunch of local makers and helps them sell their items around our town. The unfortunate thing is they are really all suffering because of inflation costs, and there's a lot of small businesses that have buckled completely. So and I'm seeing it firsthand, and that's scary. It's a scary thing, and when I see that, that does suggest to me that here, at least here locally, but I'm sure that's we're not an anomaly here where I live. It is it's really going to affect the broader economy when you see as many small businesses go under as I'm seeing here. So anyway, that just a few. I sound like a Debbie Downer. Stelios, come save me. You're always happy. Come on.
Housing is going to the crapper and everything. No, I'm kidding. What do you want me to say? I don't know.
Yeah, I know. I'm just kidding. No,
it doesn't look
somebody
good.
just mentioned Aussies on the move. Yes, I'm long some Aussie Kiwi. I bought some down here. I think K-Man, you were talking about it. You tweeted about it. We finally have some channel support. The 78% retracement hit. I got long a bunch of this yesterday. This one looks pretty promising, doesn't it? Talking about the Aussie.
It does, and I'm long too.
Yeah, I know. There's a few of us that got long here in the ForexAnalytix.
It's like a ForexAnalytix team effort.
Yeah, it was, and
the dream team.
He pointed this out. This is a big one, and I wasn't even looking at this. And this is
yesterday he did right here on F.A.C.E.
This is one of the great things about being in a community. You got this really huge, multi-year trend line coming into view, and
you wouldn't have seen that without K.
What's that?
And you're a very good trader, and you wouldn't have seen that without.
I did not see it. And
so
K-Man was like,
we only have two eyeballs, guys.
I do. My kids used to believe I had more than that, but
like Cyclops, I've won.
Yeah, and they like a Cyclops. Isn't that just one eye? Big
yeah,
eye?
it is one.
Anyway,
where's a monocle?
That's actually been a pretty good mover today. One of the other things, K-Man, maybe you can give us some flavor here. How do you feel about the Bank of Canada yesterday? First of all, I shorted the dollar CAD while it was Dale, you were succinct in saying that earlier today. I was short. I shorted it right off of 137. It was a big 618. I wanted to get pre-positioned ahead of the Bank of Canada, so I shorted the dollar CAD and the New Zealand CAD. I'm still in the New Zealand CAD short, but I shorted and that was due to somebody else in the ForexAnalytix chat room, by the way. But I shorted this yesterday. I made a profit, but the Bank of Canada, how do you feel about the BOC after yesterday's?
It's the same as with other central banks and taking the lead from the FOMC somewhere. They did hike 50 and then at the same time made comments that they dropped comments about the real need for raising further, and then went data dependent, and then they also said that rate hikes are starting to weigh on the local demand, but then same as everywhere else, not everywhere else, same as in the US, the job market is still holding up. So it was still a 50 bps hike. So I take it as a neutral overall, but they went as I said, data dependent. They still hiked 50 bps, which is not nothing. They are at 4.25%, which is not nothing. So
and a lot of people were expecting them to go the way of the RBA and be So I don't know. And thank you for the summation. By the way, speaking of employment data, we have jobless claims here in about a minute.
And then they went. Canadian dollar went completely oil dependent. Whatever oil does, Canada follows now.
Yeah, right. All right. I'm going to put up the data flash here that's part of ForexAnalytix, which is a tool in ForexAnalytix. We'll see that share that's part of ForexAnalytix, which is a tool in ForexAnalytix. We'll see that jobless claims data when it comes out. There's gold. I got the dollar here, on the left. I got the S&P right here. So we'll see instant reaction.
To be fair, jobless claims has been hovering around 200K-ish. Kay said that on the Flow Show, and it really will take a big number either way to move markets.
Yeah, wait till we start getting cruising back up to the 300,000 mark next year.
Or
then
the
it's going to
100,000.
really start to be a market
true.
mover.
True.
Yeah, once we start getting them back up in the 300s, data is
not out yet.
Sorry.
I heard a guy on
230, right in line, right in line.
Right in line. Okay, revised.
I heard a guy
right
on CNBC say yesterday by mid-24 there'll be 1 million jobs will be lost.
Yeah.
And that's not a severe recession. That's just the price of even having a mild one.
Yeah.
1 million jobs.
God.
Can I just jump in here, guys?
Hey,
there's Dick.
Hey.
He's been chomping at the bit to get in here. Nice to meet you, Richard.
And you. And from freezing cold London. I'm interested listening to you guys because you all are hoping or praying for a dovish Powell next week.
Oh, no.
We're hoping. I
don't
know
pray
it
to
ain't
Powell.
coming.
Right. Now, how can Powell be dovish when you've got inflation at 3 times the Fed's target rate?
I know. But look, maybe he sees something that we don't see. And maybe he sees
long in the market.
Fed people. What?
Maybe he's long in the market. I just don't see it. I think he's going to come out really hawkish. I think that gas prices have dropped over there. People have got a little bit more money in their pockets to spend. And I don't think inflation's anywhere near beat.
So do you short bonds here then, Richard?
Yeah.
Into the Fed?
Yeah.
And risk.
I'd short 30-year. I just don't understand why the 30 years yielding what it is. It's 1.5% below, 2 years or something. It's just lunacy, absolute lunacy, in my opinion.
Okay.
Well,
so
you know what? We're gonna wrap things up here because I'm gonna let Dale take it with you, Dick, and I want to say welcome to F.A.C.E. Glad that you're here, Stelios, K-Man, Steve. I want to say thank you guys for joining. As always, I'm going to see the rest of you all on the Morning Edge in about 45 minutes. Make sure you check out the Trader Funding Program if you haven't done so already. If you want to learn how to trade our money and not risk your own money and keep 75% of the returns and be involved in the ForexAnalytix community and have unlimited time to pass your assessments, come check us out. I'll put the link in the chat box. Dick Matthews, so glad that you're here. Dale, meet Dick. Dick, meet Dale. You guys have a great interview.
Nice to meet you. Okay, Blake Unshared. All right, so Dick, first time I've talked to you. Nice to meet you.
And you too.
And you know, Dale, it's a small world. Dick was the mentor of my best and favorite futures broker when I was a market maker in London. So it is a very small world.
Okay, was that Refco Dittmer?
It was he was at Refco at the time. Yeah, there you go.
All right. Yeah, I remember the Refco days, Dittmer. I'm from Chicago. Dick,
right,
so.
top man Tom Dittmer was. As for the others, I'm not so sure. For Tony Grant and Phil Bennett were a little bit more interesting than Tom.
Or how about Stotler? Stotler was a great experience, wasn't it? The exchange had to bail them out. Yeah. So people that are being hopeful in the holiday season, you think that he's going to be extremely hawkish, so it'll be in the statement, Dick, and because you think they're just going to go a half, right?
Yeah, I think they'll just go a half. But I think he'll come out, all guns blazing again, because there's no point in doing a half and saying, oh, great, everything's rosy. We're going to cut early next year, because everyone will just go and spend money immediately and you'll get inflation back in the system, or inflation will go up ahead. So I think he's got to be hawkish. And it's interesting listening to some of you guys looking at the dollar. I mean, the dollar has struggled in the last 2 or 3 weeks, but traditionally, dollar into year end always tends to weaken as people repatriate funds from the US back to the UK and to Europe. So the dollar probably won't strengthen as much as it could do, just purely for that one fact. Each time it's tried to rally on good news, it's sort of run out of steam pretty quickly. So I think that could be an explanation of the fundamental dollar weakness at the moment.
Okay, well, you look at the dollar index and, you know, this is pretty key level to a lot of dollar bulls.
Yeah.
See that, you know, go
Yeah.
back to 16 and then the COVID high, and it's trying to hold it underneath. I think there'll be some even more capitulation from the dollar bulls. Do you think that we could at least have some, maybe from lower levels, Dick, some type of failing rally in the Dixie? Because this was parabolic,
Yeah.
and usually you get some type of echo or
Yeah.
failing rally after a major move like this. I mean, look at the momentum at the high. So
Yeah.
I have a hard time wanting to short the dollar down here.
Oh, yeah, I sure do. If I was going to short the dollar, I'd actually do it against the euro. And probably
Right.
people recognise by my accent, I'm a Londoner. I'm no fan of our European cousins, apart from their food and their holiday resorts. But I think the euro could surprise everyone next week, and they could be the odd one out of the pack, and they could hike by 75 basis points, which will give
Okay.
some strength to the euro.
Maybe 108. You think it has a couple hundred pips left in it? There's
Could do, yeah.
Okay. All right. And are you a metalhead?
No,
You a believer
no,
in this
I
run?
don't understand metals at all. Yeah, I don't understand the way that gold behaves anymore. I've always brought up that you buy gold in inflationary times, and it just seems, you know, like a.
It does perform well in inflationary times. It just has a lag usually. If you look historically, it's not something. By the way, I wanted to ask something. You said that if Powell comes out all dovish, people are going to go out, buy everything. There's a problem, especially in the US. I was looking at the charts the other day of the average credit card debt versus the average disposable income or bank balance. I can't remember exactly how it was. And it's been, obviously during COVID with the handouts, there was a move one way. Now it's the other way. And like credit card debt is exploding higher. So people are spending on debt, on expensive debt as well. So that's something that worries me. I don't think people have that much to spend. I mean, the average person I'm talking about. If things start looking like they're going to be, if funding is going to be not going to get more expensive than it is now, I don't think people have the capacity to go out and buy everything. You know, that's a problem. But you know, I don't know. I could be wrong.
Well,
What do you think of oil, Stelios?
What do I think about what?
Oil. About oil. You've had
there
the
you
cold
go,
snap.
Dick.
That's a very tough. That's a tough one because theoretically, with China talking about slowly maybe reopening and the market being tight, any specialist you ask, they're all saying it's still a tight market. We should have been going higher, but we're not.
We are now.
Maybe it's recession fears for next year. I don't know.
It seems strange, doesn't it? Because it's actually been a mild, I guess, a mild autumn, and we're just getting the first real cold snap of the winter coming in, which will tend to push energy prices higher. And I think it's been suffering because of that. Yeah. And then you wonder what Saudi Arabia is doing. They seem to have got their noses out of joint a little bit by what's gone on with Biden and the Russians. And it just seems a really, really strange market to me now. And fundamentally, I want to buy oil. You're going to get more, use more oil. You're going to have winter, you're going to use more oil. It just seems really, really bizarre that it's like floating around at the levels it is.
Yeah, I think you're right about the weather. It's a warm country here that we live in, but usually this time of year we're already using oil or gas to heat homes. Yeah. We haven't done it a single day yet. It's still 17 Celsius. So I think the weather is a factor.
Yeah, it's the second cold day of the winter here, and I think that Scandinavia is very, very cold. So it might start to play more of a role in the market going forward.
Yeah. Yeah, it's a tough one, oil. Yeah.
Okay. Do you trade stock indices, Richard?
I keep an eye on them. I must admit, I don't particularly like the S&P at the moment. I'm probably the oldest guy on the call, but I can go right the way back. And you had stagflation in the UK, and I just fear that you're going to get stagflation again, where you're going to have a really deep recession with really high inflation rates. Not so much possibly in the States as you are over here, but I think that that's a real possibility. And I just don't see how you buy equities. I can't see any reason to buy it apart from a Santa rally to pay your bonus at the end of the year.
Yeah, I have inflation is something that I disagree with most people, and I've been saying this for a while. I think February, March of next year, when we start comparing prices to this year's February, March, which was the rate of change was really high due to Ukraine, I think we're going to see inflation drop dramatically. Because for inflation to stay at 8% or whatever it is in the US in February, March of next year, it means that it has to be rising at 8 or 9% year on year compared to the big jump that we had this year. And for me, that's unsustainable. I don't see how it's going to be happening. So I think that by definition, all else being unchanged, inflation is going to start dropping dramatically. And I mean dramatically. And that's what I think is going to cause the Fed to pivot. But, mathematically, this is what should happen. But obviously, again, I could be wrong. Things could change. Things change all the time. But
it's interesting that you think that the major cause of inflation, or by inference, you think the major cause of inflation is the war in Ukraine, not the printing of money by the central banks.
Oh, it is. Of course it is. Of course it is. But I'm just saying the price. How is inflation calculated nowadays? It's not the old definition, which was the rate of change of money supply. They have this basket of goods and all that stuff, and then they compare the prices to a year ago. Well, we had the big jump this year. We need to have the same for inflation to stay at the same level. That's what I'm saying. I'm not saying that there isn't inflation. Of course there is. But for us to go back to normal, we should see negative, 8% inflation. Then we go back to where we were before, or you know what I mean. I just think it's a huge hurdle to pass to actually register the same inflation rate in early next year. But anyway, I seem to be the minority in this, so I'm gonna shut up.
But they invaded on February the 24th, wasn't it? I know it's February the 24th. It's 2 days before my birthday, so I remember that. So the first hit to inflation would have been in the March figure.
Okay, March, April then. Okay, I said February, March, April. It had already started to grind higher though, inflation before that. So you are right. It wasn't purely Ukraine. It was lots of factors, but
What's inflation in Greece?
Oh, similar to the Eurozone, something like 8%, 9%. I don't know.
Yeah.
It's too expensive. Everything is too expensive now.
I still don't understand. I'm sorry to hog the limelight, but I still don't understand how central banks think that they can get inflation under control. And this is much more so in Europe and the UK, by having interest rates at 3%, 4%, 5% when you've got inflation at 9%, 10%. It's just, to me, it's just not logical that can control inflation.
Well, the thing is transitory, don't they? They think it's going to drop to where,
That's what I haven't heard for a bit. Transitory. So, I don't know. Be interesting next week. I think you're going to get 50 basis points from the Fed, 50 basis points from the Bank of England, and 75 from the ECB.
Oh, 75 ECB, that's punchy. Okay. What do you think, Dale? What do you think we're going to get from the ECB?
I look at the chart of the euro, and I don't think it's done. I know Greg had a completion at 106, and there could be more of a bear market rally, but they're so resilient. They're acting like beach balls lately. Especially we had some risk off, couple real good days of risk off, and they would try and take the euro and cable lower, and they come roaring back every time. So, sometimes you have to be the wrong way in the market to know to go the right way. So when you see that, you're short and it's a struggle to make money on that side of the market because the market keeps rallying back in your face, maybe it's time to put aside your bearishness and either let the market try it at another level or go with it. So I think the action's lousy in the dollar right now, and the euro's okay. I do think we're getting close to completing at least this first wave, but that could be Dixie 102.5 or so. And then we have that correction like you're talking about.
Yeah.
Still, that happens after that. And that ties in with what Dick was saying about And I remember being on the floor at the CME during the holiday in December, and he's right. I can remember periods of dollar weakness this time of the year, standing on the floor of the CME. So anyway, that's what I think.
Cool.
And
I
I'm
actually have to.
shorting gold and silver today.
Yeah, why not?
And that doesn't make sense with looking for the dollar to continue to weaken. So, I mean, there's so much conflicting stuff out there. Anyway, that's what I'm doing.
Okay. Makes sense. I actually have to
Thanks for
sign off.
interviewing me.
I was going to say I have to sign off. I'm going to go get my girls from the bus stop, school bus. So I will have to leave you. It was very nice to talk to you, Dick, and I'll pass it over to you guys. Thanks, everybody.
All right. So, Dick, what do? You just trading your account nowadays? Do you have a business model? Are you teaching people with all the experience you have?
I've given up teaching people after I talked. Actually, I'd say I haven't given up teaching people. I've got 2 young lads I'm trying to educate sitting next to me at the moment. I should have given up after I talked to the guy who used to broke Stelius. I've just founded a small foreign exchange company, and we do deliverable foreign exchange.
Okay. What's the name of it?
It's Pardis FX. And if I was really clever, I'd spell it out for you using currencies, which I'm not sure I can do. P for pounds, A for Aussie dollar, R for reals, D for the dollar, U for Uzbekistanian dollars, and S for Singaporean dollars or sterling.
Okay. All right.
And we just we help people move money around. They're buying assets overseas or repatriating money into the UK. So it's really good fun.
Cool.
I just love the markets,
So they're cash transactions. Can you can you handle money from people in America?
Yeah, sure can.
Oh gosh, because I was using what's the name of that thing that I was using Revolut so I could hold some of my dollars in, but they charge you $10 a month just to hold them there.
Yeah, exactly. That it adds up. So if you want to do anything, or any of the guys listening wants to do anything, contact me. You can DM me on Twitter, and I can help you guys out. But I just love the markets. Once it's in your blood, it's there.
Yeah, and you know what, guys, everyone listening to Dick and I right now, I know that I keep quite a lot of cash balances in banks, but if this is a major top in the dollar that's happening, besides trading, you could just diversify your U.S. dollars in cash. Doing something like this, it's something to consider. Without leverage, just consider it a bank account in the right paper, the right fiat, instead of the wrong fiat. Do you have people using you for that purpose, Dick?
Yeah, just for its national business and moving money around. We've decided they want to hold the majority of their balances in, probably not in sterling, but in Swissy or in US dollars. Okay.
So going into 2023, what are your big ideas?
Interesting that's drawing a line on the 31st of December. So I would be probably moderately short of the dollar going into year end. And I would start thinking about getting a few on board for the first couple of months next year, because as the dollar is weak in December, it tends to strengthen in January and February just by flows as people reinvest in. I would still tend to be short of sterling, and I would tend to be long of euros.
Okay, so you like long euro pound?
Yeah. I think sterling's got. I don't know how much you see in the press over there, but we've got every man and his dog is on strike over here, from the railways, the medical profession.
What a mess.
The border guards, virtually everyone's on strike. I think that politically it's not quite as stable as it appears. And I think that you're going to start getting more political tail risk involved in cable or in the pound as we head towards an election and an almost inevitable change of government to a Labour government.
Do you think the high's in, or we get one more push with the dollar weakness, maybe up to what, 25?
I think 24.45 is what I said to Blake a couple of weeks ago.
Okay,
And I just failed that 24 level.
right.
Yeah, it gets very giddy up there, doesn't it? If I see
Yeah.
123.5, I'd look to get short. Initially looking for something like 119. And I think over the course of the next year, you can see it back down towards the lows that we saw in September.
Oh, you mean 103?
Yeah.
Yeah, I would love to have an opportunity. I think that was the bottom. So you don't think that was the bottom? And
No. Historically, if the currency markets see the threat of a Labour government in the UK, they tend to panic. And I think a lot of people still feel that. I don't want to talk about politics too much, but there's still the threat of a really left-wing government over here. And I think people would tend to shift money out. And also, we're still suffering from the after effects of Brexit.
Yeah. Okay. Yeah, I was thinking maybe some type of, I'd like to be a buyer under 110. I would try it here and, risk the lows. So that's the way I see it. Do you dabble in commodity currencies? You have a view like in Canada or Aussie?
I should probably quite like both of them, to be honest with you. I think the Canadian, I was quite surprised this week that they only did 50. And whether they have talked to the Fed is an interesting idea. And I also quite like the Aussie, because I think as China gradually reopens, if it doesn't go absolutely berserk, that should benefit the Aussie.
Okay. All right. Dick, anything, you've been at it a long time, and maybe even longer than me. And, they call me Father Time here.
I started when God was a lad.
You what?
I started when God was but a lad.
Well, anyway, I have one leg in the tar pit. So does that tell you what I am?
Yeah.
Okay. So really appreciate you meeting you and coming here. We'll do it again. I'd like you to share from all the experience you have. I know everyone will, the trite say, manage risk management. What's the most important message you could give to people that are at the beginning of their journey in trading?
Buy low, sell high.
Okay. All right. And if you don't learn how to change your mind, you won't have any change left. So.
Exactly. Never be frightened to change your mind.
All right, Dick. So best place for people to follow you on Twitter or go to Pardis FX?
On Twitter or on pardisfx.com. We post every day, or I post a comment up on Twitter and on LinkedIn. And if anyone wants to contact me, just drop me an email or drop me a DM on Twitter, and I'm more than happy to talk. I just love talking about the markets.
Yeah, it shows. And, very, very nice to meet you. After you have an interview with me, you become my trading warrior brother.
Well, we got the same sort of deep voice from trading on the floors for too long, I guess.
Yeah, screaming. That's not my trade. Come in the next day, the out trades, right? So, I want to wish you happy holidays, and I believe people should check out Pardis FX for some foreign exchange cash transactions.
Fantastic. Thank you very much, and have a good Christmas and New Year.
All right, everyone. Dick Matthews.
Cheers now. Bye-bye.
Adios. So that's a wrap, everyone. You could join the team in about 25 minutes. You're welcome, Patrick, Turlin. Yeah, we're old school guys. All right. So anyway, you can't learn experience. You have to live it and live through adversity and put in the time. So I'll see you guys later. Remember, don't just count your pips, count your blessings. See everyone tomorrow to wrap the week. Adios. You're welcome.